The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 26th. Is it a turnaround Tuesday edition of today's Trader's Edge show? I don't know, but we're going to go try to check that out. I'm your host, Stevie Perseverance Rhodes, and I am absolutely grateful for your presence here. But here's what I know. The key to life is always being a pioneer of your future versus a prisoner of your past. So hopefully that's what you do. I hope you had a great day yesterday. Hope you're having a good day today. And, of course, the easiest way to make sure that we have a great day is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now's not too soon. 877-927-6648. Internationally, you can reach us at 727-445-1044. We'd love to hear from you wherever you are in this wonderful world of ours. So let's go ahead and get this show started on Terrific Tuesday, maybe Turnaround Tuesday. We'll go check that out. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading off 39 points. She's trading at 18,455. S&P down a point at 2167. NASDAQ Composite up 7. Russell 2000 up 5. DAX closing up 49 points. The FTSE closing up 13. Gold is flat. Silver's flat. Light sweet crude back 32 cents. The leader in the clubhouse to the upside as we speak right now, it's Astec Industries, ASTEC. ASTE is the ticker symbol, up 14%, $7.40 out there. You've got Waters Corp. That's up 668, about 4.5%. China Biologic Products, that's up $7. Williams Clayton Energy up 6. Euronet Worldwide up 5. Wind Resorts up 5. Dorman Products up about 5. Texas Instruments up 470. To the downside, in the back of the house, the back of the bus, it's Dr. Reddy's Labs. They must be selling snake oil. Dr. Reddy not so ready today, down $9.56. That's off 18% with some volume. I think some volume behind this equity, or 2.7 million shares. Chipotle, it's got a hot pepper going, $9 to the downside, off 2%. Panera Bread off $9, down 4%. Gilead Sciences off $8. You got McDonald's down $5.50. Maybe McDonald's was spurring the move in the restaurant sector out here. I guess what they reported, and maybe there was some issue with regard to expectations versus comp sales out here. So we'll take a look at any stocks that you want. You just got to give us a call, 877-927-6648. Just to prove that things can change in a blink. Pretty close to a blink out here. Literally, I got up, I came back to my seat, sat down, looked at my chart, and said, what just happened? And it truly was what just happened. I'm going to go to a 1-minute chart out here. Let's go to the NQ. It doesn't really matter what we choose, but you can see there was some damage that was done earlier this morning, really took place between the time frame of 10:54. I have no idea what it was. Didn't really investigate it. Didn't care what it was. It was more so, what's the market doing? But at 10:54, during that 1 minute, we saw about 3,000 contracts inside the NQ. The very next minute was about 3,000 contracts as well. So that's big volume for a 1 minute session inside of the NQ, all to the downside out there. We can see that prices clawed its way back on Turnaround Tuesday. Maybe. Let's just take a look at retracement levels here. The retracement from, and this is a 1 minute chart we're looking at. So we're just going to the swing point that sticks out to you and I. That was at 10:02 this morning, all the way down to the low that was put in here. That low was put in at 11:12. Now, what we can see is, you take a look at these Fibonacci numbers. It's a beautiful thing. Why they work, I don't know. You'd have to actually go, we just know that they do work out here. for so many things. And in the case of the NQ, from that high down to the low, the 0.618 retracement level, 46.66. Oh, sounds devilish to me. The actual high that came in was 46.66. Gotta love it. And we're leaving the cents off this. So what we've seen is from high to low, a 0.618 retracement. Now, normal area for a place for people to get off the elevators, traders out there. And now we're going to see, is that it? Is the NQ setting up an A to B equals CD to the downside? I don't know. Maybe it's set in. We've got a couple of stair-steppers out here. Maybe it's really just an A to B equals CD to the upside. I don't know the answer. I do believe with Apple coming out after the close today, I think it's around 4:30 is when they release numbers. Actually, when I saw that, I was like, did Apple release their numbers early? Was there some snafu or something? When I saw that quick move to the downside. All the markets did the same thing. So there was some unloading going on. Here's the ES Mini. ES Mini as an example, during the minute of 10:54, about 19,000 contracts. The same, about 17.5 at 10:55 in the morning. So some big volume to the downside. Okay, so now what does that tell us? What do we do now? Well, I think that what we do now is we just simply have to go back to daily charts, get a feel for what's going on. We did a lot of this yesterday, but when we're up at these levels, I don't really know what else to do to give you an idea of what's going on, which what it looks like right now is nothing more than a rotation. So we know we're anticipating, and we've anticipated that the market was going to form a top on July 20th. I mean, right to the day out there, which at this stage, that's the top inside the Dow. What it didn't tell us, what it doesn't tell us is just how deep, how far is the retracement going to go. The retracement ought to last for a couple of more days out here. What we do know is that at this stage, as long as the Dow closes below 18,505 and a quarter is what we'll call it, that's Stevie's red line out here, that says that price can continue to pull back. How far, how deep, you can take a look at retracement levels out here. In order for the Dow just to have just kind of a normal, and I do mean normal pullback, the number that you and I would be looking at out here, and first what the Dow has to do, let me turn off those profiles. What the Dow has to do is get back inside the consolidation zone out here, and I don't even know that it's going to do that. But if we go from low to high, and the low that I'm referring to is the Brexit low, the one that came in on the trading day of June 27th to that June 20th level, a normal pullback takes you to 18,026. We're not there just yet. What would increase the likelihood that the Dow would actually get down there? You would need to see it close below 18,351.36. That is the May 19th high. That is basically the consolidation top out here. And if we see price get below that, you would anticipate that that would at least be the minimum move. It could also be the 0.618 retracement. 17,658 could be the number out here. But the question is the Dow going to do all the work itself? I don't know. I don't think so. If I take a look at the futures contracts out here, let's go take a look at the NQ, see if it is playing its hand at all. Here is the NQ, and as it made its high today, the first projected high inside the NQ is 46.87. The actual intra-session high was 46.82, 5-point Roonies. That's close enough for my work out here. What is that level? That is the 1.272 expansion from high to low, from April 19th down to June 27th. This is Steve Rhodes. When we get back, let's continue looking at the NQ when we get back from this break.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's off about 37. S&P's down a point. We were taking a look. We were going to take a look at the NQ out here, looking for, some kind of messages. Whoops, I didn't mean to do that. I meant to actually keep it blown up here. So if we take a look at today's activity, we've got a little bit of a draw. You've got a nice little doji candle. The open with the contract last night, when it opened at 46.5850. Right now we're trading at 46.60.25. Qualifies as a little doji as we speak at 118. What's that mean? It means the market is tired. So the market is getting tired as we speak right now at a potential level of resistance. That level of resistance, nothing more than expansion of a set of swing points. That expansion being the trading session from April 19th, that high down to the low out here on June 27th. Now, what else do we know? Well, just because it's tired doesn't mean that it can't move to the next bar. The next bar would be a 1.618 expansion. We don't have any kind of bearish reversal signal inside of the NQ to suggest that it's not going to try to move to the next level. And taking it to the next level, 48.29.11. That's the upside target. We'll know, and what's going to influence, the biggest influence inside the NQ this afternoon is going to be Apple. Now, we saw that there was a big push to the downside in the NQ. We just started by taking a look at a 1-minute chart. We know that with regard to intraday, what's taken place is we've seen a 0.618 retracement. Oftentimes, that can be the end of the move. If it is going to be the end of the move, if we take a look at this daily chart here for the NQ, there's a red line that you and I want to pay attention to. If the market is going to croak, so to speak, and pull back a little bit further, what you would be looking for, or what you'd be looking at, is the price point of 46.22. It'll change by a few cents, but we're not going to worry too much about that. And that is Stevie's red line. If we see a close below that inside the NQ, the Dow has already suggested to us that it's truly under pressure. It was well before McDonald's released numbers. It's been under pressure for a couple of days. Well, since June 20th high out here. If the market is really going to start moving with any kind of velocity to the downside, it's going to need the NQ to participate. And the number you'd be looking at to give you that answer is 46.22. If we see a close below that level, we stay, not just trading below it, but if we see a close below that level, that is what would communicate that information to us. us. Otherwise, there's no topping real pattern out here. Hey, we're in the fourth wave of potentially 7 waves inside the Chapman wave, and then sometimes the wave 4, that's where you start to see markets go ahead and turn, depending on what time frame it is that you are looking for. With regard to what else can we see out here? We know that the Russell 2000 has been relatively strong. You might say, well, how the Sam heck can you say that? Well, here's what the Russell 2000's actually been doing. Stevie's red line out here has been nothing more than what the Russell 2000 has been doing is testing that. Those are logical levels of support or resistance. They're hidden the most, not from you or my subscribers here at TFNN. But if we take a look at it, the action from yesterday, a test and rejection, right? It's kind of like using it similar to a swing point. You come back, you test support, you bounce off of it, and that's exactly what has taken place over the last 3 trading sessions out here. Now, what's interesting about the Russell 2000, slightly different than the NQ, is we do have a bearish reversal signal. We've got a couple of them up here at the top. The one that we're going to pay attention to is the one from the trade day of July 21st. So the number here is 121170. You're trading at 121280 right now. So I'm not going to get my skirt into too much of a tizzy, but price is trading above. This is a 10-minute delay on this chart, is trading above resistance. Any close above that level, the message inside the Russell 2000 would be that it wants higher price out here. Now, if we go take a look at its, well, that was the oscillator and change line out there. I guess if I do the wave count, we can put that on here for you real quickly and see where we're at. Only in wave number, well, we're also in wave number 4. We have actually done that intraday here in the Russell 2000. So watch that figure. That figure being, again, I'll give it to you, that's a trading day from a couple of days ago. That was July 21st. And the number there, 121170. And that is in the Russell 2000. Now, the Russell 2000 has been relatively strong. Of course, I say that because the Russell 2000 is outperforming the Russell 1000. How is it that we know that? And I'm wondering if I still kept that. There we go. Here's the IWM, the small caps versus large caps. If you take a look at the top panel out here, see how the blue line is pointed higher. It says that it probably wants to go to the top of the little rising price channel that price has been in for quite some time, since about March of 2016, February to be exact. February 9, 2016 was the beginning of this nice little rising price channel that it is in. So the Russell 2000 looks pretty strong. And the NQ looks pretty strong. And that is normally what you would see in a bullish market out here. So can Apple go ahead and spoil the party? Yeah, of course it can. And if it's going to spoil the party, where is it going to trade to? Let's go take a look at Apple here, see if we can get our head wrapped around Apple. Right now it's trading out at 97.05. It's back 29 cents. And it is trading below its its daily TAS market profile. Let's take a look at it. It just moved below it yesterday. That level, by the way, is 98.09. What does that say to us about Apple? Well, if we're just going to go ahead and navigate Apple by utilizing our TAS market profiles, that would suggest to you and I that price wants to make its way to either 94.05 or 91.76. Volume yesterday was accelerated a bit, 40 million shares to the downside. That 40 million shares, we could say, was going against 38 million shares, so fairly similar. And I'm looking at the trading day, comparing it to July 14th out there. So I don't know that we could draw an absolute conclusion. Instead, what we have to do is just go with our profiles and say, okay, levels of resistance out here are going to likely be the bottom of the daily, 98.09, 98.64. That's the top of the weekly box out here. And support, most likely I would go with the figure of about 91.76 out here. And 91.76, the beauty about that is if Apple does trade to the downside, you're going to benchmark everything against the swing point from May 12th that has 76 million shares down there. You blow through that low, which, by the way, is 89.47. You do it with volume. That would be setting up a large A to B equals CD to the downside. You can come up with a number of A to B equals CD patterns should that occur out here. So is Apple actually tipping its its head to us? And I don't really know that I could make the case that it is. It's below important levels of support. It did that yesterday. That would suggest to me that it wants lower price. How much lower? I don't know. I don't know. So there you go. So I don't have a good feel for you with regard to Apple. Okay, so now where do we go with all this? Oh, I know where we go with all this. We answer a question that came up inside the Tigers Den, Vertex Pharmaceuticals, I believe. So let's go take a look at Vertex Pharmaceuticals, although I don't know what the questioner was looking for inside of Vertex, long, short, this, that, or the other thing. So instead, let's just go take a look at the chart and see what it is that we see. So what pops out at me when I take a look at the chart out here, two things. The first is that price is trading both above daily and weekly profiles out here. And so that's nice. That's bullish. Also, that it's trading back into a swing point, the most recent swing point, which was June 6th, that had volume of 1.2 million shares. You moved into it yesterday with 1.9 million shares. Very interesting. This is Steve Rhodes with TFNN. What do you think is the second thing that pops out at me when I take a look at this chart for Vertex Pharmaceuticals? Check it out during the break. Let's see if our minds match. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tigers Den, but wondered, what exactly is it? The Tigers Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tigers Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tigers Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow. She's off now about 72 points. S&P's down 5. NASDAQ Composite off a couple of points. We were taking a look at Vertex Pharmaceuticals before we went to that break. Now, one of the things that sticks out at me as I take a look at this chart here, let me pull this back, is what was going on at the lows out here. Now, the trading session that stuck out to me the most was April Fool's Day, April 1st. And the reason is because it formed a nice little hammer candle down there. And so we know that the lows out there, 75.92, is something that ought to hold. Now, the volume on that trading session was 3.6 million shares. What we also noticed is on the trading day of April 28th out there was 5 million shares, but that was really testing that hammer candle. And that, in essence, was a sign of strength off of that hammer candle bottom. And then what we saw is price just really kind of went sideways for a couple of weeks out here, started moving higher maybe around May 20th. Price came back and tested that level again, nearly tested that level with much lighter volume on June 27th, right around Brexit, right? So there was 1.9 million shares going against a breakout, in essence, with 5.4 million shares, which in essence was also, how do you like that, in essence there, which was also testing the hammer candle with 3.6 million shares. So this thing has gone ahead and created a nice little bottom for us. That's Vertex Pharmaceuticals. Now, what also sticks out at me then is that is really setting up a consolidation-oriented pattern. So we know that the low is relatively cemented out here. The question would be, hey, where would you go ahead and put the top of that consolidation? One example that we could use the high from the trading day of March the 2nd. That would be logical. And if we were to use that, then what we can see is that Vertex Pharmaceuticals has broken above that consolidation level. It has done it before. It did it right here on the trading day of June the 2nd. Looks like maybe the day before it just squeaked above it June 1st. So it traded above it for just a few days, got back inside the range. This is why we're paying attention to the Dow, right? And whether or not it's going to break back inside the consolidation range out there. In this case, Vertex went all the way back down to the bottom and basically tested both the breakout as well as the hammer. And that's what really stuck out at me when I took a look at this. Is this a real break? It might be. When we were taking a look at volume, before we went to that break, we said yesterday was 1.9 million shares. That was comparing it to 1.2 million shares on June the 6th. Now, on June 6th, the high was 96.49. Yesterday, the high was 96.52. So it was a test and a rejection, but with volume out here. Today, the high has been 95.91. So it has not tested that level of 96.49. It's just really an inside day, little dark cloud cover candle out here. So we don't have any real conviction necessarily behind what Vertex wants to do. If there is a breakout, though, what you now have is you have a measured move, which is going to be equal to that consolidation. So we know that price is above all of its market profiles, both its daily and its weekly out here. If Vertex has, in fact, broken out, if it holds above this consolidation, it's going to try to make a run for about the 110 level. Now, from a retracement area, we're just going to the daily chart. I'm going to the swing point high here from November 23rd, down to basically the hammer candle low out here. You'll also see that at 112.25, that becomes your 0.618 retracement area. So what does Vertex need to do? It needs to stay above this consolidation area, and it needs to get beyond the 98.38 level. That's your 0.382 retracement. If, in fact, it can do that, you're looking at 112.25. That's ticker symbol VRTX, and that is what stuck out to Stevie out here. Okay, so now what do we want to take a look at? Let's see if we've got any other clues out here. On Vertex Pharmaceuticals, let me give you this as the next move. Again, because, Paul, I don't know what it is that you're looking for out here. Here, this happens to be Vertex Pharmaceuticals, and looking at its daily horizontal trading range boundary line. So 93.40 is a level that you'd like to see this test and reject or stay above. And if it does that, then what that says is it can make a run not just to the midpoint, which is 97.82, but ought to make its next run up into the 102.25 level. So that will go ahead and complete the analysis of Vertex. But I'm going to go ahead and put in Apple here. Let's go see what we've got with regard to daily horizontal trading range numbers out here, see if this will give us any kind of a clue. And with regard to the daily, this also suggests that maybe a retracement back down to 92.69. That's on the daily chart. Let me see what we've got here. I'll go ahead and pop the weekly numbers on the screen out here. I'm going to try to. There we go. There is the weekly. That would be the green lines that show up. And so, yeah, 92.69-ish ought to be strong support in the case of Apple if it initially, or if it pulls back out there. So watch that level like a hawk out here. This doesn't give us a clue as to whether it's going to move down to that area, but we know it's trading below profiles. It's trading below its daily horizontal trading range at 98.06, and logically it says, hey, 92.69 is certainly game for this equity. Let's go take a look at, see what's going on with the advanced decline oscillators out here. If we take a look at what's going on inside the New York Stock Exchange, slightly below zero. It was below zero yesterday. All we see inside the New York Stock Exchange is a lot of hubbubaloo. I don't even know what hubbubaloo is, but if we were going to define hubbubaloo, we would basically say it ain't doing much out here. If we take a look at the New York Stock Exchange for the last how many umpteen, I think is, you know, if my dad were yelling at me if he were still alive, every now and then he used that word umpteen. Where did that come from? But in any event, if we take a look at since the trading day of July 14th, just simply a market that has been moving sideways. Now, the question is that distribution, right? Just we know we're in a light volume marketplace. Could it be just simply moving sideways, distributing stock out there? And the answer is it certainly could. Now, what I did was I went back 10 years. They said in 10 years' time, this pattern has to show up at some other point inside the New York Stock Exchange. Bad conclusion. I couldn't find it. Maybe you can find it. I could not find a period of time where there was such a narrow trading range inside of the New York Stock Exchange. And I mean narrow. We're talking 10, basically what, 10,750 to about 10,808. So we're looking at just a 100-point trading range on a vehicle that's 10,700. This is very narrow. I don't really, is this coiling? Is this coiling to move higher? Is this distribution? And we're going to see a price careen to the downside. I don't know. I know that, you know, sellers are trying to exert their muscle out here. If price is going to pull back, where may it find support? Well, it could be the top of the consolidation around the 10,650-ish range out here. The NASDAQ composite still in the hands of buyers. The Dow clearly in the hands of sellers out here. So the Dow has been the weak link. In fact, yesterday we were taking a look at the Dow being the weak link. You and I went to some intraday charts to just try to get a feel for what was going on. We saw that A to B equals CD pattern that had formed. Interestingly enough, when we saw the markets careen to the downside, what the Dow was doing was it went ahead and made a 1 to 2.618, A to B equals CD. Amazing. I'm thinking Leonardo Fibonacci was rolling in his grave. Well, he wasn't the inventor of the A to B equals CDs, but he certainly was. And 2.618 is part of the Fibonacci summation sequence out here. Price was also moving lower with less relative energy. But we have not seen a bullish reversal signal out here. This is Steve Rhodes with TFNN. Hubbubaloo apparently is a bubble gum. Is that the case, Tucker? This is Steve Rhodes. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Good news, folks. Umpteen is actually a word out there. Little did I know that I figured my dad had made that up in the early days in the 50s out there when he would say, you know, he has asked me umpteen times to take the garbage out or to cut the lawn or who knows what it might have been. But when I Googled it, I said, what the heck? Let me go see if it's actually out there. It's an actual English word. It actually might have been my dad that invented it, except it shows usage of it back in the 1800s. So I'm figuring probably not out there. But I do see the rise right around 1950. Of course, it really was used a lot looks like up until about 2009. So I will try not to use it. I think it's the first use of it here at TFNN. So, and I don't really have much use for it. So there was some time that we killed out there. Now, what do we want to look at? Are we in the last segment? No, we're not even in the last segment out here. So, we've got a market that is, as best I can call it, it is neutral, which looks like we've got a lot of rotation going on out here. If we take a look at, if we were going to make our decisions about what the market is going to do and base it upon the New York Stock Exchange, it would sell. We got a sell signal yesterday, a little doji candle as we speak right now, still a sell signal. Advanced decline oscillator below zero. Fire away at will, just short the heck out of the SAMHEC of the market. But, when you take a look at the Russell 2000, right, we took a look at that earlier. Russell 2000 traded above Stevie's red line out there. Today was a test of a 1208.60. That's not giving us a sell signal. If we take a look at the NDX 100 right now, that most certainly is not giving us a sell signal. That number that you need to see a close below on the NDX is 4628.30. Any move down there, even if Apple disappoints and price moves down and just, in essence, test that area, test that level, it's nothing more than a test of support. It's not a signal that says go short craziness out here. If we take a look at the real health of the U.S. stock market, right, and you go look at the Wilshire 5000, you're going to see that today has just been nothing more than a test of that red line out here. You're trading just slightly above it as we speak right now. So we're not exactly seeing, forget about exactly. We're not seeing any kind of sell signals. Let's just look at the sectors inside the S&P 500. Maybe give us a better view as to what's going on. Number one weighted sector inside the S&P 500, you've got the XLK. 45.41 is the number that you need to see a close below. Otherwise, this is just moving sideways out here. Sector number two, what is it? I don't know if it's still the XLV. It's either XLV or XLF. I think let's put XLV, then we'll do XLF next. We're going to do all of them. XLV, you've got price trading. So if it's number 2 or number 3, you've got price trading right on that oscillator unchanged line, maybe just slightly below it. It's probably about 74.66 or 7, and you're trading at 74.64 out here. So no real signal there. XLF, let's go see what this sector, the financial sector, is doing. Of course, I have to properly type in the symbol. Otherwise, we're not going to get any information. 2346 is the number that you would need to see a close below in order for this sector to go ahead and give you some type of sell signal. Now, what is it? Let's see. You've got the XLY, XLP. So we'll go to the consumer area. So XLY. This may be the fourth weighting in here. I probably need to redo my weightings. Today, nothing more than a test. 8133 is the number. Nothing more than a test of the oscillator unchanged line, XLP. And this is just going to kind of give us some help as to where the rotation may be taking place. Well, certainly is out of here. The XLP, the consumer discretionary area, we can see that price oscillator started turning down on the day of July 19th. And we've continued to see, in fact, today, if in fact the XLP is able to close below 55.03, that happens to be a nice little bullish reversal signal, little morning star, little three-river morning star. That would say this still has price action to go to the downside. So we can see after really nice gains inside the consumer discretionaries, you've got some people that are taking their profits, so they're coming out of here and they're pouring into other areas of the market. XLP, we got the XLU, the utility sector, right? Let's go take a look at it. The utility sector, the number to be paying attention to, well, it's 52.65. And so we can see that has turned to the downside. Now, normally, but not always, sometimes you see the utilities sell off. That money goes into other sectors inside of the S&P 500 out here. So you've got the consumer discretionary, which was a huge winner, money being taken off the table. Huge winner inside of the utility sector. At this stage, money being taken off the table. These are sectors inside the S&P 500. They're not really weighted that well out here. Nothing significant, like 3% along those lines. XLB, let's go take a look at the XLB, the building materials sector out here. Today, nothing more than a test of the oscillator unchanged line. 48.53 is the number that you'd be looking at for a close there. I think XLE, I might have covered them all, right? This would be the energy sector. The energy sector obviously getting knocked around with oil moving lower out here. You can see that it moved below its oscillator unchanged line. It gave you, in essence, a retracement sell signal, whatever you want to take a look at it, on July the 20th out here. Today's candle session, not bullish, just green. This would suggest to me that the energy sector probably headed back to the June 27th level, where you'll be able to go ahead and take a look at volume at that swing point. But there's nothing here to suggest anything differently. But we're not seeing all out. Did I not do the XLI? Sorry about that, Mr. Bill. XLI, the industrial sector out here. XLI has given us a little bit of a turn the last 2 days. So today, Mr. Bill, was a test of resistance, right? Old support now perhaps has become resistance. 58.33 is the number there. That's the number that the industrial sector needs to get above in order to get back to its bullish ways. Otherwise, you're likely to see a further retracement inside of the industrial. So that covers the sectors within inside of the S&P 500. And the reason that we take a look at that, because the Russell and the NDX, they're not giving us any signals that price wants to move lower. So where is it the money? We know where it's shifting out of. And the question is, where is it shifting into, if it's shifting in at all? Now let's go take a look at a couple of stocks out here. Moving to the upside, moving to the downside. Let's use the same tool out here. Let's go take a look at NUGT. Of course, we'd really want to take a look at the GDX, but we'll go take a look at NUGT first, see what it's doing. It's moving higher. You can see that this sector, which is the mining sector out here, right, the individual stocks that make up the mining sector, you can see that it's been trading below that oscillator and change line since July 16th. That's when it gave you the last, in essence, sell signal out here. What is the NUGT likely to do? Continue moving lower. If we take a look at GDX, that's going to be the same thing. But because it's not one of those triples, it's maybe a little bit better way to take a look at it and engage things. In order for the GDX, in order for the mining sector to get back to its bullish ways, 2976 is the number that it's got to clear. That's the number as of 1:50 in the afternoon. And right now you're trading at 28.48 out here. Just a little bit of sideways movement. I don't anticipate we'll see much movement inside of gold or silver, not until the Fed minutes come out. Maybe not even then. We'll see. But look for perhaps some fireworks tomorrow between 2 and 2:30 during the David White show out here. I am uncertain if I'm going to be able to get back in time for my show tomorrow at 1 o'clock. So just giving you the FYI, I'm going to do my best, but I have a bit of travel and uncertain if I can to get back here into the seat in time. Right now, we've got the Dow up 60 or off 61. Freudian slip? I don't know. You've got the S&P off 4. NASDAQ Composite is flat. Russell 2000 up 4 points. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
welcome back, folks. Let's for Mike inside the Tigers Den. Let's go take a look at ticker symbol CCJ Kamiko Corp out here. He is long this, looking at this as a looking for a bottom, thinking longer term. Let's first start off by taking a look at a daily chart. Let's go see what we know. We know that this equity formed a low on January 20th. It did it with 1.6 million shares. And yesterday and the day before were a test of that area. 1.5 million shares on July 22nd. Remember, we're going against 1.6 million shares. And yesterday was a test with 1.5 million shares, 1.485 to be exact. And there was a close below it. Now, what else do we know about yesterday? Well, the interesting thing is, if I'm going to go switch back and forth between charting applications out here, we know that in this equity, it was pushing lower with less relative energy yesterday. And if we start from the swing point high here on April 29th and we do our nice little Chapman wave count to the downside, what we know is yesterday, it looks like it was wave number 7 for you, Mike. And wave number 7, that's where you can see a change in trend. When you see price moving lower, doing a less relative energy out there, that can be a sign of a bottom. And today, right now, is a bullish engulfing. And prices trading above Stevie's red line, and that is priced out at 1037. You're at 1044. You'd really like to see price close above 1037. That would tell you that the price oscillator has begun to turn up. That says, okay, that can move higher. Now, on your way up, let's assume that, in fact, this is a uranium play out here. If it is moving higher, this next test, well, first let's go ahead and put our market profiles. Let's go see if we can find any other support or resistance out here. We've got support. Let me just update this and make sure. It looks like today is a brand new profile. It is. And so, Mike, you've got some other friends out here. 1023 happens to be the TAS market profile low on a daily chart. Now, the setup here is that this is a bullish profile. Why do I say that? Well, if we turn off the numbers, we turn off the candles, we can see that the point of control, which is at 1049, is closer to the support level, the bottom of the box, at 1023. That says that inside this box here, it's really buyers that should have control, which should push price. You try saying push price 3 times in a row out there, even though I can't even say it one time. 1082 is the number where price ought to go ahead and move to. Now, the nice thing about this is that today's profile that appeared both below the previous low, not a good sign, but above the previous high. So it's really kind of a neutral, but yet a bullish bias to the box that had formed out here. So this says you ought to at least see a move up to 1082. Well, the nice thing about that is at 1082, Mike, you're going to go ahead and run into the July 15th swing point. That only has 983,000 shares out there. That's the nut. You want to go ahead and see this thing crack through that area with more than 983,000 shares. If you've got that, then in fact, maybe you have a bottom. I'd also go ahead and put a trend line in here. In this case, that happens to be Stevie's blue line, that little diagonal arrow out here, but be watching for. So this ought to be able to get to that 1082. No reason for it not to. And then watch to see what's happening as this gets into that July 15th area. That's what the daily is showing us for ticker symbol CCJ. If I go ahead and take a look at a weekly chart out here, here's what you're going to be looking at for the week. We're going to turn off the profiles. We've got that same swing point that it is contending with, which happens to be the week that began January 18th. 6.6 million shares, and last week was a test with 7.1. Not exactly what you wanted to see out there. So hopefully, for your sake, you get to see a test this week with lighter volume. Boy, you'd sure like to see a bullish reversal signal on a weekly chart. And unless this thing closes above 1073, you're not going to get it. So I hope that helps you out with CCJ. Folks, stay tuned, because our man, our polar bear, resident polar bear, David White, he's up next. And then we've got the Tom O'Brien Show from 3 to 5. Again, I'll do my best to get back here to spend time with you tomorrow from 1 to 2. If not, I'll be back on Thursday. Take care, folks. Have a great afternoon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.